say like there's a lot of exciting developments happening around DAOs and a whole like new infrastructure for organizations to be formed, and lots of lessons being learned around governance, around how you set those up, and sort of like DAO tooling.
Good afternoon, everybody. Joining me today is Diana Biggs from Valour, an exchange-traded product issuer. In this interview, I ask, where was all the value created during this recent crypto inflow cycle that we saw shortly after COVID started? We talk about the current crypto macro environment, and we get into Valour's business model. Please enjoy the interview. And also, if you haven't already, please like, subscribe, and ring that notification bell so we keep making more of this content for y'all. Join us today. We have Diana from Valour. Diana, thanks for joining us.
Yeah, thanks for having me.
So before we sort of get started, I figured we could maybe get a little bit of an introduction to your background. It's your first time chatting with us. From sort of looking at your background that I have here, it seems like you're kind of uniquely positioned to sort of be a thought leader in this space. Could you maybe walk us through your background?
Yeah, so my background is pretty varied, but predominantly focused across finance and technology, I would say. So, I grew up very much in the computer space, early internet, sort of started developing internet sites for Nortel back in 1994. And yeah, I was really fascinated by the internet in the early days. I later studied actually a Bachelor of Science degree. I went overseas, studied at the Technical University of Vienna, and then was working in London in website development and communications prior to my MBA. From my MBA, I started working in management consulting, specialized in financial services with Oliver Wyman. And really, that was great timing. That was also around the start of the financial crisis. So really saw an opportunity to combine technology with financial services across a lot of potential areas. So financial inclusion being one area that was really close to my heart. Obviously, also sort of risk management opportunities there. And so I left management consulting in 2012. With the idea to actually move my career more into technology full time. Also did a lot of pro bono work and also consulting work in sub-Saharan Africa. So during that time, I also got to do a fellowship with Kiva and work in Burkina Faso and Sierra Leone, setting up social impact focused micro lending. Long story short, sort of the combination of those themes, sort of like, emerging technology development centered around the internet, sort of like a cyberpunk movement, and the ideas and some of the motivations around that, around broadening access, firstly in my work to the internet, then looking at that in the scope of financial services and economic empowerment. And then wanting to work in tech and with startups is kind of like the combination of those themes is what led me to discover Bitcoin back in 2014 and decide to move my career in to focus on that. Over the years, I did actually move back into more traditional financial services in 2017, where I had the opportunity to build out some innovation teams for HSBC from scratch, first for the retail bank and then in the private bank. So that was also really interesting to see those emerging technologies from the perspective of a really large financial institution, and then moved back into crypto in 2020 with Valour.
Okay, so we always hear sort of, anecdotes or mumblings online of large financial institutions that are dabbling with crypto or with blockchain. During your time at HSBC, how involved would an institution like HSBC be with blockchain?
Yeah, so definitely they were involved across a number of areas. I would say predominantly it was looking at trade finance and the potential solutions there. There's also a number of initiatives around, I think like involved in things with R3. I think during that time period, say 20 17, 18, 19. That's how a lot of the large financial institutions were approaching it. They were looking at like the potential applications, but through more sort of private blockchains first, and then it was only later that some, and I would say it's still like a subsegment where we're looking into the potential for actually open decentralized blockchains and how that could apply as well. Certainly, I'm sure it's very different now. Over the last 2 years, we've seen a massive increase in sort of institutional engagement, adoption, testing, and learning across a broader range than, say, this sort of earlier narrative of private blockchains.
Okay, so let's talk about what's happening in the world right now with crypto. Obviously, Bitcoin went on this huge run shortly after sort of COVID started, and we had some really large quantitative easing packages or fiscal stimuluses. Bitcoin seemed to be that sort of asset class that ran. And we saw the emergence of some companies like, Celsius, for example. And now it looks like a lot of those are blowing up, like the hedge fund 3 Arrows Capital. What's sort of your outlook on what's happening right now in the crypto world?
Yeah, so obviously, having been in crypto since 2013, have seen a number of these cycles. This one is obviously pretty special because of the overall macro environment that we're facing across everything in all types of markets in the world right now. And that obviously has an impact, especially with how crypto is positioned more broadly, like as an asset class right now. So there are those trickle down effects there. And also lessons to be learned for some of the companies operating in the space, as we've seen. So, I think for me, the bear markets have always been the most interesting time personally to be in the space. Last time, actually, when I did move out of the space, it was 2017 during sort of that ICO bubble. So I think it's really interesting to see how also here in terms of like the more centralized institutions being the ones where we don't have the transparency that's inherent in actually some of the decentralized, like the DeFi protocols, where you can actually see what's happening and it remains relatively open and sort of within its own remit, so to say. So I think, like there is obviously no magic bullet with yield, and some important lessons to be learned about risk management. And sometimes when there's a pressure on growth and these hype cycles, those priorities shift. So I think right now, being in a bear period where people can focus on actually sustainable revenue opportunities and building propositions where there's sort of like the tangible and sustainable elements to them will be the key focus, and it's a good opportunity for that.
So what are some of the things that we've seen built during this crypto cycle? We've seen tremendous capital flow in. Obviously, our Twitter feeds or news feeds are filled with stories about a picture of an ape that's drawn selling for hundreds of thousands of dollars, and most people are rolling their eyes at that, saying, okay, well, there's no actual productive value there. But for the entire crypto space, with all this capital flowing in, what do you think some of the positive outcomes from it?
Yeah, well, I think it's been really positive and really interesting and exciting to see the resilience of the decentralized finance protocols and the propositions that they're building, and how those are actually standing up to these types of market conditions. And we're in the very early stages of building out that infrastructure. So I think there's obviously a lot more to be built there, but it's certainly a positive sign that there are protocols and offerings there that are holding up well. NFTs, as you mentioned, certainly an area that got a lot of excitement over the past year. I think it's pretty clear that there was going to be winners and losers there, and that it was still very much early on. I think like in terms of like the technology of NFTs and what we're seeing being built and the infrastructure being built around that, it's incredibly exciting area. There's so much more potential, even like beyond, say, profile pictures, beyond just art. And, you know, the people working in that space are really focused on actually building out those propositions and the ecosystems around them. Definitely, we've gotten, like, obviously it's been a short time period and it's still super early, but I would say like there's a lot of exciting developments happening around DAOs. And a whole like new infrastructure for organizations to be formed, and lots of lessons being learned around governance, around how you set those up, and sort of like DAO tooling. Tons of really interesting developments happening there that could have a lot of potential use cases, a lot around many different things. Like, for example, decentralized science. We've seen some really large raises in that space recently from organizations that are actually looking to disrupt scientific research and to open it up. And just like the potential implications there are super exciting, because that has been quite an opaque area. You know, it's difficult to get funding for certain types of research. Things like rare disease, there was a DAO recently that launched that's focused on that, and how you can bring together type of data pools from around the world through open and transparent initiatives that could pool together funding and research around some of those harder to find things, which would typically be siloed off, or different scientists, patients, et cetera, wouldn't necessarily have access to each other. So there are these really kind of interesting and like real world use cases that we're seeing start to emerge. That's personally what I'm really excited about.
Okay, so let's talk about Valour. It's Valour or Valour?
Valour.
Valour. Okay, a company that we've talked with Russell Starr, the CEO, a bunch of times about his gold company Trillium. I've never actually had a chance to chat with them about DeFi. I think maybe we talked like a year ago, when I think it was called Route Master or something like that. What's the high level overview? The company's changed an awful lot since the early days when Russell first got involved to now. I go on CDAR and I see this massive balance sheet, like $475 million of assets or something in that range, based on the last CDAR filing. Market cap of around $80 million. What's the general sort of overview for Valour?
Yeah, so I think I don't know if so much has changed. So essentially, the company where I was CEO is an ETP business. So we do exchange traded products. So that's a company that was acquired by DeFi Technologies, and we've just rebranded the entire group as Valour to simplify that, as we're all working together. And the focus of the company is primarily on this ETP business. So in Europe, you can have exchange traded products that have digital asset underlyings. And this is a really simple and secure way for investors to gain access to digital asset exposure without having to set up an account with a crypto exchange, and to be able to gain that exposure through their bank or broker. And also that provides also some benefits in certain countries as well, where you can put those in, for example, your retirement or your tax-free savings accounts. So it's really convenient. It's through mainstream channels that investors know, but they're able to access these new and innovative asset classes that people are interested in, and being able to have regulated access point to. So that's the main area. We also have a small venture portfolio. We're looking at DeFi and Web3 seed stage to Series A, and also involved directly in DeFi networks. So running nodes, or participating, for example, in the Pith network, which is a data oracle for Solana.
So how does the exchange traded products? I was on the website today looking at it. There's like a 0% management fee. So how does Valour actually make money off of offering these exchange traded products?
Yeah, so the 0% management fees are just on our Bitcoin and Ethereum products. So the first two products we came out with. So those launched when the company went live. That was back in with the first product was the Bitcoin Zero product back in December 2020. And in the market, like our primary market initially was the Nordics, where we now also have product listings on Euronext in Paris and Amsterdam, also in Germany, in Frankfurt. But within that primary market, there were already a number of players and ETPs on the market. So we wanted to go in with a new proposition. Also, the market had really changed from when those products had first come out, and they were charging really high fees, actually at 2.5%, which is really high for an ETP. And actually, one of our founders, Johan Wattenstrom, was the creator of the first ever Bitcoin ETN. And so since that, and that was back in 2015, and over those
Bitcoin ETN. Is that exchange traded network?
No.
Okay.
No, again,
okay.
In ETP, basically like a tracker certificate tracking Bitcoin, which is essentially what these products are.
Okay.
So he had created the first one of those, and that was back in 2015, and that's when these fees of 2.5% that some of our competitors have been charging came about. And of course, the market infrastructure, the costs for custody, the costs for brokerage, trading back 5 years prior were much more expensive. So you had a much higher operating costs in order to do that. So given the maturity, given our the relationships that we have with the various counterparties that we're using, by negotiating on fees, by keeping our operating costs really low, and just being a small, really hardworking team, we wanted to come out with those first products to be zero fees, to bring those benefits and make them the most accessible. And we've seen with all the competitors in the space that certainly since our products have first come out, that others have absolutely been dropping their fees. So that is the case there. We have another on the other product ranges, and there is a fee associated with those products. So, and then with some of the product underlyings, because we're hedging the products 1-to-1, proof of stake tokens, for example, the company is able to generate additional revenue through the staking.
Okay, so what's the blue sky case for investors? They're interested in Valour. There's it's risk capital. It's a small cap. There's got to be that sort of case to sort of see that tremendous growth or cash flow opportunity. Would that come through the exchange traded products, or is that through a different area of the business?
Yeah, so we're I think the exchange traded product business is really strong. There's a lot of room for growth there in terms of creating new types of products, access to new types of digital assets, as well as some of the basket products that we have in the works, and other types of partnerships. We also now have invested in Seba Bank, so we're working on a number of partnership and commercial opportunities in partnership with them as well, and continuing to grow out like our venture portfolio as well, and continuing to look for other opportunities in the space. But definitely the ETP business and helping investors to get more access to these digital assets is one that we're really focused on, and that where we see a lot of room for growth.
Hey, well, Diana, thanks so much for hopping on here and doing this. It's a very interesting story that, as I said, really caught my eye when I saw the balance sheet on CEDAR and said, "Wow, this is just a lot going on here." I now have a much better understanding of it. So thanks so much for hopping on here, and hopefully in the future you can come on and tell us more as the story continues to evolve.
Thanks so much.
All right, everybody, thanks for watching. We got lots more great content coming up over the coming weeks. An interview with David Morgan, Amir Adani from Uranium Energy Corp. And heck, I may even do a live stream or two with the great editor of The Deep Dive, Jay Lutz. All right, everybody, thanks for watching, and please let us know what you think in the comment section.